Test, test, test. Okay, I'm just sharing the new link. Okay. Hi, everybody. Give me one moment.
Hi folks, sorry for the delay. I think everything should be fine now. Just give us a couple of seconds to reshare the links everywhere and then we're good to go.
Okay. Now, presuming we're still live, I will go ahead and get started now. Thank you so much for the patience, everybody. Hopefully you're hopping over to the new link. The old link that you're using is not going to work, so unless you are on this new one, you won't be able to hear me in real time. I want to thank everyone for your patience. I know it can be a pain in the butt having a stream start late, and apparently there were some issues with YouTube and our Skype connection that we were able to resolve thanks to Max's genius on the tech fixing side here. So with that said, we've got a lot to jump into. There's some optimism going on, not just from the crowd, but from us due to some of the metrics starting to look a little more rosy. And we're going to look into that today. Obviously, as most of you may have tracked, there was a big CPI report that showed that the jobs report in the overall U.S. economy was looking slightly better, just slightly better than the anticipated results. And that led to a bit of a boost in Bitcoins and the general crypto market's prices. And it hasn't really stopped yet. We've seen Bitcoin climb somewhat to about that 26.4 to 26.5K level where it still sits now. And it appears that the overall picture as it relates to crypto and gold and the S&P 500, there are some hints at a turning point here. And I say that with uncertainty, to say the least. There's a lot of reasons why this rally can continue, but we do see that things like daily active addresses, for example, and we'll touch on this more in a bit. Bitcoin's daily active addresses have really climbed quite a bit. Got to make sure that the recent data, there we go, that's more like it. So yeah, yesterday actually was an extremely high metric for daily active addresses. If I go back to the last year, you can see that Bitcoin hasn't had an output of 1.12 million unique addresses interacting on the network since April. We're talking about April 18th, the last time we saw it this high. So essentially a 5-month high in the amount of unique addresses interacting on the network definitely indicates that we are starting to see a little more interest. And remember, this isn't just a few whales or some bot that is wash trading. These are unique addresses. So this really does hint at the fact that the network is starting to pick up in activity in a serious way across the board. And one thing that might be holding it back is the fact that circulation is still staying low. So even though we're seeing lots of unique addresses, the amount of unique tokens just don't want to budge right now. And it's causing, it certainly doesn't prevent Bitcoin from going up, but it limits our optimism in a huge rally. Sometimes circulation picks up after prices start to move in one direction or the other, as we saw back in early November when the FTX collapse happened. Obviously, that increased circulation huge as people reacted and decided to actually start moving their tokens. But for now, even though addresses are picking up, tokens are not. right? So that's a bit of a concern. If we look at the screener, we have this bar that's kind of dwarfing everything due to some updates recently made by CoinMarketCap. So it doesn't really give the true visual look of how things are going. But you can see that Bitcoin is up a modest 2.2%. Ethereum down 0.4%. But there were plenty of assets that had some good weeks. They're just really hard to visualize right now. Bitcoin Cash being one of them, as optimism surrounding ETFs continue to be very evident. And Franklin Templeton, at the beginning of the week, for those who are following the news, they announced that they filed for an ETF, which did boost the markets briefly as well. So between the Franklin Templeton ETF and the CPI report showing slightly better outcomes than expected for the US economy right now, there were a couple good mini boosts that were injected into the crypto markets as those respective news stories broke. On the social end of things, we can see that it barely budged. Bitcoin and Ethereum are about the same level of discussion as last week. Stable coins being talked about a little bit less. Solana has been getting a lot of news with their decent sized climb. Polkadot as well, starting to see a lot more discussion. This could actually be due to our own discussion of Polkadot's development rates, and a lot of other Twitter handles were reposting or putting out their versions of the news. So perhaps it was something else in the news, but a 25% rise in social volume, it's definitely significant. So that's being talked about more. Aptos, a big uptick in social volume. VE Chain, so this and VThor were the two newest assets on the block for Coinbase, and their newly listed status allowed their prices to rise, particularly VThor. And let's look at that for a minute, because I think it's pretty fascinating what's going on there. So we've got VET, and then we've got, here we go, VThor token. So you can see, let's just zoom into the past week. Huge rise starting on September 11th. So between now and 4 days ago, a nice 86.5% rise at its peak. Since that peak, it's come back down 21.5%, but it's still up 46% since the news of the Coinbase listing broke and hit the mainstream. So big rise there. I would expect that it starts to calm down, and you can see the volatility has already started to become a lot more neutral now. Checking the social dominance really quick for it. Here we go. Yeah, I mean, there was a ton of discussion related to it back on the 13th as the price was peaking. This is very typical. You see the mainstream get extremely excited about it as it's really starting to launch, and the mainstream is what causes the price top to occur, and suddenly it gets boring again, and now people are no longer talking about it. So it's one of those assets that really just does not get a lot of attention unless it's getting a humongous surge in market cap levels. Looking at VE Chain, a little more scattered social dominance. We can see that it actually peaked about a day before VThor, and then it fell back down. So I think those two are still worth keeping an eye on, but as far as I'm seeing, this was basically just typical excitement for assets that are added to a top 3 exchange in the world. So with that said, let's get back to Bitcoin here. And I'm also going to look at let's look at the article really quick first that was put out. For those of you familiar, we have a metric known as development activity. With it, we can actually see the amount of notable GitHub activity that's happening on the network on a daily basis. We're not just looking at the total number of GitHub commits. These are specifically important GitHub commits that indicate that the project is actually being innovated and improved and finding ways to advance its technology. Um, we did an article about it to kind of look at the past 30 days. A lot of the usual culprits, if you followed development activity before, Polkadot, Kusama, Cardano. Chainlink is a nice surprise for the Link community, up to the number 4 spot. But generally what we wanted to do was look at kind of over time how these assets are improving their development. And this is just the past 3 years. And you can see that the vast majority, if not all of them, maybe with the exception of Filecoin down here, that's actually down a bit in the past 3 years, most of them are improving their rates over time. And this is what you'd like to see from an asset that you are investing in, a dedicated team that is trying to innovate and improve and make their project more feasible and viable for the current climate of crypto. And I think, if you are, I won't name any projects in particular on this chart or even ones that are off this chart, but if you are looking for investment opportunities, this metric is an extremely good justifier. It's not really the reason to invest in something, or at least the primary one, but it is up there as one of the things you can look at for your portfolio assets as something that can validate that you're investing in something that has a team behind it that cares, right? That isn't trying to rug pull, that isn't trying to pump and dump. They are effectively really trying to make their project something that is worthy for the crypto climate. And I think that's important. And on top of that, I mean, you can look at any individual assets development activity here, or you can look at their contributors count as well, which is the overall amount of contributors that are developing into a project. And as you can see for Ethereum, it had been climbing up until around November, December of last year, and it's kind of stagnated a little bit, but obviously the last 3 years, it's still up significantly, which is what you'd like to see. And then on top of that, for those of you who weren't on last week's call, we have this new social trends page, and definitely check out our insights where we talk about how to use the new social trends and why it's important. It can be really helpful, and we'll look at the social trends here in a bit today as well. All right, so going back to the main template for Bitcoin, let's see what we have right now. We'll zoom out to the last 6 months. Oh, and I've got a brand new model that I'll be showing shortly here that is something I'm pretty excited about. It's going to be released publicly next week. Since you guys are on the stream, you'll get a nice early look at how it was built, how it works, and why you should care. For now, volume we see for Bitcoin is down, not really much change. Transaction volume, same boat. So it hasn't really shown much of an uptick, but the big story, as I mentioned, would be the daily active addresses, where we saw a 5-month high yesterday. I would be fairly certain that we're going to see another big day today before it calms down on Saturday and Sunday, where activity for all of crypto tends to get a bit lower as people kick up their feet a bit. But you can see circulation still is an issue with the, I wish that was loaded right now. It would show that there is a bearish divergence right now between market cap and the amount of unique tokens being moved. But that's, of course, just one of many metrics here. We can also look at the 30-day MVRV, which has climbed back up into positive territory, just ever so slightly. Average traders are up about 1% over the past 30 days. Ideally, you'd like to see us be in the low area down here where MVRV is, negative 10% or lower. Ideally, even negative 15% or lower is great as a low risk opportunity to invest in an asset when you see that for the 30-day MVRV. And then the 365-day is still sitting just above neutral, plus 7% over the past year for average traders. So pretty much neutral, if not just slightly above that risk threshold. but certainly not a terribly scary time if you want to add on or invest in Bitcoin. As far as funding rates go, we have seen a few signs of shorting. Nothing too serious though. It looks like this is on Binance under the USDT trading pair in particular. But I'm seeing that it kind of, we had a lot of euphoria, not euphoria, but at least a little more longing going on at the end of last week, and it's come down a little bit. So this is actually a good thing because it indicates that traders are a bit hesitant, and there are a few more perpetual contracts that are moving toward shorting crypto rather than longing it. And generally speaking, when there's more shorting, there's more chance of a liquidation and a chance of crypto prices moving in the opposite direction. So keep an eye on that. Whale transactions, I'm not really seeing too much here. It looks like, yeah, it looks like the 100K plus transactions have come down, and 1 million have come down a lot. So we'll get context behind that and really see what these whales are doing in just a moment. We'll break it down by tier. I'll also come back to the ratio of on-chain transaction volume and profit to loss in just a moment. I should note that the mean dollar invested age line, in other words, the average age in which Bitcoin is sitting in the average address, it is continuing to climb up. We don't want to see a lot of climbing. We'd like to see it start to get flat or even start to dip down. But right now, Bitcoin's mean dollar invested age is at an all-time high of 622 days, indicating that a lot of stagnant coins are staying stagnant without much interest in moving addresses and starting to circulate into, you know, new wallets once again, which is usually key for a bull market to trigger. We saw a fairly small network realized profit loss spike, but this was large enough yesterday to be the biggest we've seen since June 30th. So that is significant to see. It does look like there's some realized profit going on, and it's probably going to match that when I get over to the ratio of transactions in profit to loss in a moment. Supply and exchanges, we can see it's starting to move back down. We had some concerns when we were really starting to see a lot of supply coming back to exchanges at the turn of the month here, the beginning of September. But now it appears that the exchanges are starting to get less coins once again, which is a good thing. We would like to see, we'd like to see that coins are staying away from exchanges overall, as big upticks in movement would indicate that we are potentially going to see a big sell-off for that respective asset. So all good on supply and exchanges. Social dominance, it has come down quite a bit. Bitcoin is starting to be a little bit ignored again relative to how it was being talked about in July when ETF madness was going on. It seems as though there's a little more euphoria on some pumping altcoins. And I know there are some questions, and we'll look into a few near the end of the call here. But generally, you don't want to see Bitcoin's social dominance drop off too much, as that is kind of a reflection of greed and a reflection that the crowd is more interested in speculative assets that are on a bigger heater at any given time rather than Bitcoin, which is the organic way that crypto markets and the overall sector typically grows. Weighted sentiment, we can see that it's kind of neutralized out once again. A little bit of extra talk over the past month, but it's actually starting this latest week under the neutral level for the first time since late July. And then development activity, for what it's worth, if development activity for Bitcoin is actually relevant to you, it has actually climbed to one of its highest levels it's seen all year. So that is good to see as well. All right, as promised, let's look at the ratio of transactions in profit to loss first, and then we'll head over to Bitcoin whales. So these are the top cap assets in crypto and their ratio of profit versus loss that's going on for transactions. So we see that Bitcoin is actually seeing this huge uptick in profit taking right now, which matches what we expected to match with the network realized profit loss, which was also seeing a big spike. It's largest since June. So this indicates that this small uptick that we saw after, Bitcoin dropped down to, I believe, right around 25K, and then jumped to 26.5. That got a lot of people excited about profit taking, just that small uptick. Generally not a great sign. We don't want to see that too many people are moving their assets at these very small profits, because big profit taking generally leads to prices dropping, whereas a lot of loss taking is a form of capitulation and shows that the crowd is restless and afraid and uncertain about the future, which is generally when bottoms occur, because they're selling at a loss and then whales scoop it up and pump up prices. So right now it's people selling these small gains, and using that rise as a justification to get out of crypto, and profit take. So we need to see this turn around hopefully soon. You can see it's not just Bitcoin. XRP is having a big profit taking week so far. Litecoin is neutral and Cardano is neutral. So basically it's just Bitcoin and XRP, but anytime Bitcoin's one of them, you have to be worried for the entire sector a little bit. It's obviously a small sample, and I expect that this ratio is going to start coming down soon, but it's something to keep an eye on, and we will keep you posted if we see any developments on that. Besides that, let's see what's going on with whales right now. Not just for Bitcoin, but for stable coins as well. We see that Bitcoin is starting, it's pretty much flat right now. I wouldn't say that this is really an accumulation, but this green line represents the wallets that hold anywhere between 10 to 10,000 BTC. And right now, it's kind of hovering just above 2/3 of the overall supply in terms of what these wallets hold. It's been up pretty big since August 17th, with about 0.07% of the overall supply being accumulated. It may not sound like much, but that's, I believe, tens of millions of dollars. So at the very least, we're not seeing a drop, right? Because as I've said on previous calls, when we go back to the last year, this is what Bitcoin's sharks and whales have done in the past, really dropping off fast and leading to these sudden drops in segments anytime that they're dropping like this. But they've kind of started to balance out, and we've seen obviously price growth since they dumped back in early to mid-November and stopped that pattern. Other assets to keep an eye on, we see that Tether is kind of flat, at least for the last few weeks, about 4 weeks or so. It started to just stay kind of neutral after this dump really started in mid-June. That's good to see, because it at least shows that the buying power for sharks and whales that hold between $100,000 to $10 million in Tether, they're kind of flat and staying where they are now. USDC, they're still on a bit of a dump ever since early August. So buying power isn't quite as much as it was then, but not a huge deal. Binance USD, this is the big story for stablecoins. Look at how they're just continuing to climb and now hold over 8%, about 8.1% of the supply. That's by far the most we've seen over the past year. DAI, we've seen that they have climbed a lot. They've flattened out just a little bit, but yeah, I'd be pretty happy with the fact that, from March 12th until now, these sharks and whales have accumulated about 8.9% of the entire supply of DAI. That's a big sign of confidence there. Now, on the other end, True USD, which is kind of fallen out of the top 5 for stable coins, This has dropped significantly. Sharks and whales are not very interested in holding it. And then USDP is not really seeing much of anything in either direction. It went through this large swing and then it's kind of dropped. Now it's up a little bit, but I think in general, Tether and USDC are the ones to keep close track of, and then BUSD and DAI secondarily can be a little telling for the shark and whale buying power at any given time. But Bitcoin is flat. It's not being dumped, which is good to see. And I don't expect that we will see serious dumps as long as, you know, this line is staying afloat. Okay. Yeah, we already mentioned social dominance and funding rates. Let me debut the new model that will be released here very soon. I'm super excited about this. I've been working hard on this for the past week, and it's coming together nicely. I'll explain how it works, and then of course we'll get into some questions here in a few. So looking at this grid here that's in front of you, the goal of it is to tell you when there's an anomaly for one of our 8 most telling or alpha metrics that we have on Santiment. If it is so we're looking at the past 90 days. Anytime we see a green dot, that means that that day, which you can see here on the left, so for example, September 9th here, AirSwap, for example, we see that it had a green dot on September 9th. That indicates that it was a top 2 day in terms of whale transactions, as you can see by this column, on September 9th. So on September 9th and September 10th, back to back, we saw a whole bunch of whale transactions on AirSwap. So if I go to AirSwap really quick and validate this, type in AirSwap, whale transactions, add the 100K plus, 3 months. So yeah, the reason this is showing up as a spike is because it's tied for first with a few of the previous ones. So that may not be the best example. We'll try another one. We'll go straight to Bitcoin. How about that? Bitcoin, which would be right here. You can see they're all in alphabetical order going from left to right, then the next row, then the next row. If we look at these 2 green dots, what do we see? So this is active addresses, which we just went over. We saw that Bitcoin had a huge uptick in active addresses, and thanks to this model, if you hadn't seen the beginning of the stream, you can just add active addresses and see absolutely we had big upticks, and there's another uptick going on right now today, which should update soon on the anomaly finder. So that will tell you, or in fact, it's already here. I take it back. So the 14th and the 11th were the 2 largest days of address activity over the past 3 months. And we can validate by going, this is the 14th and this is the 11th. So the model is correct that these are the top 2 ranked. Going back, we also saw a red dot on Bitcoin. This means it's a bottom 2 day in terms of whale transactions, which you can see at the top. So it's in the whale transactions column, and it's showing for September 10th. So now we can go back and say, okay, there was a big whale transaction anomaly, and very few transactions going on the 12th. Go to the last 3 months. Already good. Make sure it's on the daily here. And just as it indicates, there was a big low on the 10th for whale transactions, the lowest over the past 3 months, with less than 4,000 $100,000 transactions. So these are really helpful for any asset you're looking at, especially if you're an altcoiner and you're constantly trying to dance between assets depending on which ones are showing the most bullish divergences. You can just get a clean look without having to scroll on anything, without having to highlight one asset or go on Sandbase and look at the template that you may have saved for some of your favorite metrics and look at each asset one by one. This just gets straight to the point and tells you any top two or bottom two instance for the most important metrics that have happened. I think it's really going to revolutionize what Santiment already offers and can lend itself to faster research, more efficient understanding of what's going on in the markets and which assets have the highest likelihood of a pump coming up next. We can do a few more examples. For example, Chromia had a whole bunch of green dots going on here. We saw an uptick or a good opportunity in MVRV, network growth, whale transactions, social dominance, and even aged consumed or destroyed, depending on what you want to call it. All of this happened toward the beginning of the week, or I should say Saturday or Friday, Saturday, Sunday, basically. So if we go over to Chromia, let's say we saw that on the same day, going back in time, let's say we found this on Friday or Saturday. And let's just open up several of our top metrics all on one template. So immediately we can see, okay, there was definitely a huge uptick in trading volume and transaction volume. If we just went back 1 week ago to September 8th, we can see that the price is up 14.2%. So definitely one of the better performing altcoins. Big uptick in daily active addresses and circulation, just like the model told us. And then look at these whale transactions going nuts. Relatively small because one of these bars is just $1 million plus transaction. But this was the most $100,000 plus transactions going on in the past 3 months. And that would indicate that there was much bigger involvement from whales compared to what we've seen for a long time, which could trigger a little more of a climb, which is exactly what's happened. So it looks like the anomaly finder was successful in helping us find an opportunity. Even supply and exchanges, you can see how it had this weird drop and then came back up. These are what you want to see when you're looking for some weird activity going on for an asset that you may be paying attention to or you've never paid attention to. But it would tell you that Chromia was getting some of the biggest anomalies in crypto at that time. And if you were investing in those anomalies when they broke, you would have been handsomely rewarded with about a 14% rise in market cap. It won't always be that simple. Sometimes it might just be one dot for a metric that you care about. You know, Melon seeing a big social dominance spike, maybe it isn't that big of a deal to you, but if you're looking for assets that are getting more and more discussion rate over time, that can still be helpful. To name all of the metrics that we have covered on this model: MVRV, active addresses, network growth, whale transactions, social dominance, ratio in profit loss for any on-chain transactions, exchange balance, basically a big uptick or big downtick on one day for the amount of coins on exchanges. And then finally, age consumed or age destroyed, which measures the amount of coins that were stagnant that are suddenly being moved, sort of like what mean dollar invested age measures. So I'm excited to release this, just a few more tweaks and updates, finishing the metrics for a few more assets, obviously, and getting it all consistent. But once it's released, I might start using it on a regular basis for some of the altcoins to look out for in crypto. And I hope it benefits you. Please give feedback if you'd like to be an early alpha tester. Let me know, and we can shoot that model link over to you very soon. Just a few others I wanted to see. Oh yeah, Ethereum. Look at all these green dots for Ethereum. It also had a huge uptick in active addresses, which I'll show in just a moment. Social dominance. Right now, actually, it's getting a 3-month high in discussion rate. So that's good to see. And it even had an age consumed spike. So let's look really quick at Ethereum as well. And then I'll show a few things on the MVRV side to see which assets are showing the biggest opportunities right now. So yeah, huge uptick in transaction volume. Here's the daily active address spike. And if you were following our Twitter, we posted about the fact that Ethereum just had its second largest spike in unique addresses interacting on the network ever in its 8-year history. And the likely reason for it, not confirmed for sure, but likely reason was that courts approved the FTX liquidation of the assets. It doesn't necessarily mean it was a dump, though, as Tom here predicted. It simply meant that there were a lot more addresses that were pouring into the Ethereum ecosystem as a result of the FTX liquidation. And all of the addresses, or a large majority of them, were suddenly moving once again after being dormant and not being touched since November of 2022 when the exchange suddenly collapsed. So Ethereum had a huge uptick. We mentioned, what was it, age consumed. We just look at that really quick. We'll just put it here for now. Yeah, so right as the price was starting to rebound a little bit, huge tick up in dormant coins that suddenly were starting to move on the ETH network. So that was a positive sign as well. Yeah, I think that's enough on Ethereum. Oh yeah, and then look at the mean dollar invested age too. As a result of that token age consumed, if we go back to the past year, this was by far the biggest drop in its mean dollar invested age line, I believe, in a few years. If we probably go back to the bull market, yeah, back here in December 2020, it was starting to go down. But this, due to that, if our theory is correct, due to that FTX liquidation and all of the assets being moved from these wallets, we had the biggest drop in stagnant activity in a long time, and going back from an average of 518 days to 492, that's a massive drop of about almost 30 days for the mean dollar invested age line. So I think that there's some stuff that's really worth keeping an eye on for Ethereum. I won't necessarily go out on a limb and say it's going to outpace Bitcoin all of a sudden. But if altcoins are starting to come alive again, Ethereum could go on a bit of a run itself. So that's all I'll say about ETH. As promised, let's look at the MVRV model. Before it tries to refresh, as this model likes to do while I talk about it, look at all of the underbought and semi-underbought signals that are still going on. We can see Serum, and I believe that was ApeCoin that were showing some big underbought signals still. So overall, altcoins still have a ways to go and could very well go on a rally and have it be justified by our MVRV model, showing that they have been severely oversold or underbought, whatever you prefer to call it. And we've been saying that for a while now. Eventually it will be correct and we will see that altcoin rally, and then watch to see if the MVRV model quickly, starts showing that they're overbought again. But for now, still very underbought. Okay, why don't we take a few of those asset requests, Balaresh, if you still have those up. I know we jumped streams, but I'd love to look into a few of the metrics that
Ricardo had a couple of suggestions, starting with Polkadot, as well as Theta, FTM, or Near.
All right, let's go right down the line and start with Polkadot here. So Polkadot is not an ERC20 asset, so we're limited in the amount of metrics that are going to be available for it. But we can still look at a few things like funding rate, volume, social dominance, things like that. So for starters, we see that Polkadot is actually being shorted quite a bit. This is a bit too long-term of a view. Let me go back to the last 3 months. There we go. So look at this for Polkadot. It's actually getting a lot of shorts right now in terms of its perpetual contract funding rate. I see that I see that it is starting to be a little bit less notable over the last few days, but you can see that most of these big shorts were punished over the past week. These extreme shorts right at the bottom, a lot of people really get suckered into doing something like that and then pay the price as prices start to climb and we see liquidations and losses start to pile up for those people that think that prices are still going to go down. Now, that said, it's been shorted for most of the past 4 weeks here. And really, when it starts to get lessened or get close to neutral, that's when we start to see another downtick, and then we see big shorts again. So now that there are less shorts, we could see, if altcoins have trouble, we could see that Polkadot slips down below $4 again. But it's almost, you can look at these shorts like your friend. If there's a lot of shorts going on, it limits the amount of downside because people are buying Polkadot and theoretically at a higher price just to bet against the asset. And that kind of keeps an asset afloat oftentimes. We really haven't seen much longs at all for the past 3 months. A few neutrals, which is kind of what these are, but for the most part, all this shorting is a good sign for DOT. Let's see what else. Social dominance. It's actually seeing a lot of trading or social volume toward the beginning of the week or middle part of the week, around like Monday or Tuesday. And that was right at the bottom. Again, this could have been related to talks about its development activity because it's, of course, sharing its repository with Kusama, and the two of them have the most development going on according to our metric that we use to measure activity for teams. But yeah, social volume had a huge uptick and it started to come back down. But I view this dominant spike as a good thing. This was the largest since July 25th that happened the other day. And it happened right at the bottom. It likely was due to some capitulation and some doubt in Polkadot. And if that happens as prices are plummeting, it often can foreshadow a turnaround. So I think there's a good chance that that's what happened here. And then finally, we skipped over trading volume here at the top, but it looks fairly neutral. The long-term trend is that it's still coming down. That doesn't really foreshadow prices too much, but you can see that if trading volume is growing into a trend, usually that trend is more likely to continue. If volume is falling, that means the trend is more likely to reverse. So right now it's falling, and the price has been falling, which is a good thing because it means that there is very little interest in trading Polkadot's extended losses that are going on. All right, what was next? I heard Theta. All right, so Theta is, I was mistaken. I thought it was an ERC20. I take it back. So as the 56th ranked market cap asset, Theta is currently sitting at just under 60 cents right now. Since its peak on July 25th, its price is down 28%. So definitely struggling to stay afloat. Volume is pretty non-existent right now relative to what it was seeing earlier this summer. That being said, 6.79 million in Theta volume still is nothing to shrug at. If we go down to social dominance, yeah, it doesn't look like there's any special discussions going on revolving Theta right now. It's pretty ignored overall. On any given day, it's getting like 0.03% of the discussion rate related to the top 100 assets. So very little. Weighted sentiment's probably a little skewed just because of the lack of discussion. Take a look at development activity. That's interesting to see. We just saw a huge spike in that. If we go to the last year, yeah, I mean, this is typical. We see kind of small waves. It is not a very highly developed asset, but it does get at least attention 1 to 2 months or so, kind of in a cycle, and then it goes back to dormant. And this latest one looks like it just started. I don't see that it has much of an impact on price though. And then finally, funding rate. I don't know if we have funding rate. Yeah, we do. So it's kind of bounced back and forth over the past 3 months. Yeah, it does look like we just saw a bit of a short spike, but that just came back to normal today. If it does start to see short spikes again, especially an extreme one like we saw back on August 27th, that would be a really nice bottom sign. You can see that most of its big bottoms, the 3 largest short spikes, look at this. July 27th, right at a local bottom. August 6th, right before a local bottom, and then it bounces. And then this one on August 27th, right at the bottom, and then it bounces. So if you are watching on an intraday scale and you want to swing trade an altcoin, Theta is a great example of one where when you see extreme shorts, it very likely will lead to at least a short-term bounce that you can take advantage of. What asset was next, Balresh?
Maybe let's do one from another person. There has also been a request for World Mobile Token, WMT.
Sure. World Mobile Token, this is a more obscure altcoin and also not an ERC20. You guys are over 3 on these. It is the 375th ranked market cap asset and currently sits at 10.6 cents in market value. Since its top back on July 13th, its price is down just under 30%. And it is seeing a big uptick in trading volume. I'm interested as to why that is. Maybe the person who requested it has a little news update, but obviously as not a non-top 100 market cap asset, our knowledge of it is going to be limited unless it's a huge breaking story. But yeah, trading volume has risen, and that's interesting to see. It does indicate that there's a little more attention on the asset from the mainstream crowd right now. See if there's funding rate data. I don't think there would be. I didn't see funding rate, but I do see social volume and dominance as we have for every asset. And it looks like the overall discussion does not reflect what's going on with its trading volume. So if we look at WMT here, it started getting a lot more trading about a week ago, and it's still high. I mean, today looks like it's going to be quite high as well, but I think we need to see a trend one way or another. The price has been kind of just choppy for the past month or so, but if we start to see prices rise and this trading volume still stays high, that would indicate that these traders are likely trading it for the purpose of buying and expecting a rise. If it goes the other way, that means there could be some dumping going on. But with limited metrics for WMT, that's about all we can cover. What would be the next one, Balresh? All right, FTM. Haven't looked at Phantom in a while. It is an ERC20, so we finally have one that we can look at fully with all of the metrics available. I'm just curious if it's on our anomaly finder here.
Note though that those will be the FTM that are on mainnet, and it's also its own layer 2 basically, or sidechain.
Okay, gotcha. All right, so Phantom, it doesn't look like there's anything on the anomaly finder. You can see there's this red dot here next to age destroyed, but that's on our current date, which means it's an incomplete day. So oftentimes we'll see a red dot next to a day that has not come to completion yet because the opportunity for any age consume to happen is so low compared to all these 24-hour days. If it's a 6-hour day so far, of course it's not going to have as much of a high age consume. So that's what that red dot explains. Anyways, so trading volume has been sinking since mid-July. That trend hasn't turned around yet. transaction volume, we did see a spike near the bottom on September 12th, but we don't know for sure whether this was related to buying or selling, because it was kind of on this rise here. I mean, long term, this is a bottom, but for very short term, it happened during this rise. So hard to say whether this was some money moving for the purpose of buying or selling. Daily active addresses has really been sinking. Circulation, nothing special going on right now. So yeah, utility is pretty low for Phantom at this time. On the MVRV side, the 30-day average returns right now are at about negative 7.8%. So I definitely would suspect that Phantom, yeah, it's semi underbought right now on the overall MVRV scale that combines short, mid, and long-term trade returns. And then on the long term, look at how low it is, guys. Negative 51%. So this could indicate there's an opportunity here. That's an extremely low ratio for the long-term traders, and it's the lowest they have been since, it looks like, right around the turn of the year, late December, early January. And obviously, under similar circumstances in late December, this was a great time to buy. And there was more to it than just low MVRV. All of crypto was starting to make a turning point in the first week of January, but we are seeing a pretty similar setup, not quite as extreme on the 30-day. We'd like to see the current orange line be a little bit lower, but yeah, Phantom does look like it has an opportunity with pretty low risk right now, especially with such a low average return for the 365-day traders. So keep that in mind. Adding on or opening up a position in Phantom has much lower risk than it does usually. So probability-wise, you have some opportunity there. Funding rates, fairly neutral. We're not really seeing any extreme shorts like we did for the previous assets we looked at. Whale transactions, almost just non-existent right now. Very few moves from the 100K plus or $1 million plus transactions. Let's take a look at the tiers really quick. So Phantom is at about 19 cents. I would say sharks will start about here. And then we start to get into whales with the red and yellow line. Very few new addresses that are popping up. We saw one, yeah, I mean, since the turn of the year, we've gone from 300 million to 1 billion coin addresses up to 5 now, but that's not too significant. Let's look at the percentage of supply held, though. That could be a little more telling. The percentage of the sharks are staying quite low. The larger sharks / small whales are a little bit higher. Yeah, I mean, that's a decent climb. This could be a good sign. And then the big whales, they've been moving down. Yeah, it doesn't look like there's much movement here in terms of sharks and whales, unfortunately. But at the very least, they're not dropping either. So I can combine, let's just say I want to look at all of the sharks and whales. They're pretty much just staying flat, but they also own almost all of the coins. So maybe we can take off 1 sec. Let's look at only 100K to 100 million. Yeah, it's still flat. There's just not much movement for Phantom at all right now for sharks and whales in either direction. Ratio of on-chain transaction volume and profit to loss. Nothing really special here. Not much profit taking or loss taking. Dormant coins continue to stay dormant. No real signs of a big drop there. Network realized profit loss is neutral. Exchange balance. There is a lot of Phantom that sits on exchanges. It's currently sitting at 31.5%, which is one of the higher ones I've seen. And it does look like back on the 11th, there was a big move upwards. This was the highest inflow in about a month. And it's stayed there for now, but I'd be a little nervous about that. It's moving in the opposite direction, so perhaps there was some attempt to sell. I do think this could have likely corresponded with this divot upward and then fall back down, and we saw right here that there was a big transaction volume spike. So that likely had to do with the big exchange inflow that was going on. And then not a lot of discussion related to it. And Phantom does not typically get much development activity, but it at least gets more than zero. So you can be happy relatively about that. All right, I think that we covered enough assets for today. I'm starting to get a little raspy. I think Maxim should be joining again next week. We'll keep you guys posted on that. But I hope this was helpful, and particularly with this new model, guys, I would love to hear your thoughts. It'll be released very shortly, and we'll have some alpha testers who can dig into it and let me know what I can make even more intuitive here and improve for you. And with that said, I want to thank Balresh for his patience in getting the YouTube stream working. I know it was a challenge today due to some tech issues and some changes in software that we had no control over. But thank you all for hopping over to the new stream, or if you're watching this on replay, appreciate you checking out the past week of our analysis. And I wish you all a wonderful weekend and best of luck with the trading. Take care, guys.